Uh, Hello guys. Uh, Hello guys. Welcome back. So today I would be talking about one very hot and burning topic, which is the fall of the Adani stock. So I think this is quite in news for the last 2 days because there has been a sudden decline of the prices of Adani stock, and this is unprecedented. Like this is happening after a very long time. That a list of several stocks in the Indian stock market has seen a sudden drop in their prices, and this drop is very significant. So, for example, there are certain stock which has dropped to around 28% on a single day. So, this is something which is not good for the stock market and obviously for the company. So, this on a single day. There are several reports which claim that the company has lost around 2.8 lakh crore in market capitalization, which is again a huge deal. Losing this much money in a single day, which means that around 2.8 lakhs crore has been just vanished off the books of the company and obviously the retail investors who have invested. Okay, so not going uh, much into the technicalities. I will just talk about briefly about how does this thing entirely work, right? So I'll try to explain the most simple forms so that you understand. So you don't need to be a stock trader or you don't even need to have a degree in finance to understand this. This is just a phenomena which seems very counterintuitive at first. That how does this entire thing work? How can one company or one report bring down such a decline in a company as big as Adani? So let us just explore this in detail. So I'll be talking about three key terms. One is why this sudden fall of the stocks, why how this is happening and why this is happening. Then who is this Hindenburg research? Because if you guys know that this stock fall in prices is happening because of a recent report released by Hindenburg, which is a US-based research. Uh, I can call it a startup because it was started in 2017. So basically, which does all kind of forensic research into companies and then takes a short position. Now, don't be confused with this jargon. What is short position? What is short stocking? And how does Hindenburg profits out of all this, right? And what would be the larger implications on the Indian market? So I'll try to cover that as well. Larger implications of this event. All right. All right. So without further ado, let us just straight jump in and see how this entire phenomena is working and what could be a lesson learned from this. Okay, so firstly, I'll tell you why this is happening. So, what happens is if you know how this stock market works, so let us just call this why sudden fall in prices. So, why this happens is so let's say this is our stock market. When there is and there is let's say this stock trading. Let's say this is some certain stock which is being traded on the market, right? So there are some sellers, there are some buyers, right? And let's say this is being traded at some price, let us call this 3,000 rupees. So what happens is when in one thing about market is that it works on sentiments. So I think this is something very important. So most of the investors who invest in the market, they don't have a financial analysis or statistics with them before investing. Obviously, they do, but more or less it works on the sentiments about the company, about the general macroeconomic scenario, and then also some triggers regarding the company. So basically, how what is a robust market? So before we understand this fall in prices, understand what is a robust market or a robust stock, right? A robust stock is one which has a good fundamental, right? Fundamentals are strong. What do you mean by fundamentals? So fundamentals are nothing but the basics of the company, that it is having good revenue, right? Good revenue. It is not defaulting on its debt. So debt is also manageable. Then there's a public trust in the company, right? Public trust, because it is maybe compliant with the laws, right? Compliant with the laws. So there is a kind of goodwill, I would say, a goodwill surrounded around the company, which makes the company stocks, if it is a publicly traded company, robust, right? So there's a stability in this stock. So people will buy the stock as an investment, and and also do some intraday or maybe short-term book some short-term profit, etc. etc. But this is what a good company or good stock is. But let's say if there is some market sentiment which goes against these stocks, right? So what happens is people fear that, okay, I have purchased this stock, or I have this value of the stock as rupees 3,000, and in the future there might be a lot of selling. So this works on the principle of demand and supply, right? Demand and supply. So when there is a huge supply of these stocks in the market, right? So that means there are a lot of sellers who are selling their positions or selling their stock, and there are few buyers, right? Buyers are less. So what happens is the stock prices automatically start to come down, right? Because people would fear that, okay, there is a future apprehension that the stock prices will go down because the company is not doing good. There's some cracks in the fundamentals. So this will create a negative sentiment against the stock or against the company as a whole, which creates a huge demand. So demand increases, which creates huge supply. The supply increases, and demand is low, which means that they will have to sell at lower price, and then maybe the stock prices come to around 1,200 rupees. So this is what is happening with Adani. So because of a report released by Hindenburg, so Hindenburg is a research organization, I'll talk about this later, which released a more than 100-page report, right? And this report basically has a lot of investigations into the I would say the entire the stock ecosystem of the Adani Group. So what is this basically? So basically, this report has, or I would say, what this report claims. This is the Hindenburg report, which claims that the fundamentals of the Adani Group or the Adani stocks are shaky. Shaky. It means there are a lot of manipulations. There's a lot of corruption. There's a lot of things which makes the price of stock as overvalued. And just to be very clear, that there's a trust built around this company, because this Hindenburg research, even in the past, has released such investigative or forensic investigations of stocks of several companies, such as Nikola was one of the company, a US-based EV manufacturing or the battery manufacturing company, which was again a target, or not target, but one of the victim, I would say, of the Hindenburg report, which led to negative sentiments about this company. Similar thing is happening with Adani. So basically, with this Hindenburg report, which claims the fundamentals of the Adani stocks are shaky, because it comes with a lot of points. So I would not go into the details of all the points. I'll just mention a few. And this report has suddenly created a negative sentiment in the market. So what does this mean? That now that people see, okay, so the stock prices, which is, let's say one of the company of Adani, which is trading at around 3,000. So people are now, after reading this report, and after the kind of authenticity that this Hindenburg research group claims. So this negative sentiment has led to a lot of selling in the market. So when there's a lot of selling in the market, obviously the prices go down, right? So I think that's why in a single day the prices has come down by ranging from 18% to 23%, and even some stocks 28%, uh, uh, because basically Adani has a group of stocks. So let's say Adani Energy, Adani Ports, etc., etc. So there's a huge decline in these stocks. So there's a sudden slump. So there's a the term uses sudden slump in the stock prices. So this is what is happening, and which is a kind of I would say worry for the Indian investors and also the company. So now let us understand what is this like. What does the Hindenburg report say, and in what has what is so striking about the report that people have started selling the position, and the selling has been so drastic that the prices of stock has come down to such huge, significant number. So basically, this report claims or alleges that the Adani stock or the Adani group is involved in stock manipulation. So this stock manipulation. So what is the stock manipulation? Stock manipulation means uh, doing some kind of tactics in the market to increase the stock prices, right? Or to inflate the stock prices, inflate the stock prices. How do we do this? I'll come to this later on. Or maybe the company having doing some accounting malpractices, right? Accounting malpractices, which which means, so how does this related to stock manipulation? Which means that the company is not very robust in its revenue. Maybe the revenue is not what the company shows, right? The profits are not what the company shows, right? So this could be like few of the accounting practice malpractices which the company might be involved in. There are other claims as well, such as money laundering done by companies. So this is a huge, huge report. Uh, I think this is a 100-page report, the link to which I would share in the description, just for the transparency sake, because it's not something which I am claiming. This is something which this report is claiming, right? So what does this do is now this shows that okay, the stock prices have been inflated. How is this inflated? So just to give you one example of how this report or what this report says is that the group has or there are several shell companies. So, you know what is shell companies? This means these are hollow companies with no businesses of their own, but they are just like registered somewhere in the tax haven or even in the country, and which are thus used to or the account of the company is used for some market manipulation. So let's say a shell company X Y X. Let's say there's a shell company Y. Let's say there's a shell company Z. So the report claims that there are several shell companies and majorly listed in Mauritius. So this report claims that the Mauritius, so it has downloaded the data of the entire registry of Mauritius and found that these XYZ companies have some links to the Adani group. So maybe some relative of Adani, right? Linked to the Adani family, and they are involved in maybe money laundering with the main Adani, let's say Adani ports, right? And or also, in like buying and selling of stock. So what happens when, let's say, this shell company buys a lot of stock uh, from the Indian market? So this creates an artificial scarcity of the stocks, right? So this inflates the prices. Obviously, money laundering. So this means the profits as shown are not what it is. So all these kind of make the fundamentals of the company shaky, right? So fundamentals shaky. So this means that in the future, these networks could be busted. This means the business could go, these network could be busted, could be busted. The business could decline naturally, that there could be organic uh, decline of the business, and in effect, the stock prices would eventually go down. So basically, this report claims that okay, this means that company is not what it shows to be. The prices or the profits or the business practices are not what is needed for a good publicly trading company, and hence now this is the important part, and hence after this report, the company says that hence we take a short position on some, let's say, I'll just call the stocks, on the stocks of Adani. Now, don't be confused with with this term, short position. I know is a bit confusing to many, so I'll break it down in the to the most simple form so that you guys understand what this is. So basically, just understand. So after this report, the company says that hence we take a short position because we feel that the prices of stock will decline or are not what it's supposed to be, and in the future the prices are declined because the fundamentals of the companies are not good. So this is what the report claims, and hence just to give you an overview, what happens is, so this report comes, there's a negative sentiment in the market, right? Negative sentiment. This means there's a there's a increase in selling of stock because of the apprehension that in the future the prices will decline. Hence, the investors will think that, okay, let me just take out my money because I don't trust this company, and the prices fall, right? So the price comes down from 3,000 to, let's say, for example, 1,200, right? Now, okay, this is clear. This is pretty easy. But now the most important thing is, what does Hindenburg gain from this, right? What does this company, is this company a kind of social act, like what you call as investor activist company, or some kind of NGO, or why is it doing this, right? Why is this? What is the agenda, right? So by agenda, I don't mean any hidden agenda or something. That is something on which I won't comment, and I'm also not in the capacity to comment. But the agenda, as in, what is the immediate agenda for this? So the immediate agenda is profits, obviously, profits. And how does a company make profit out of this scenario, right? So basically, as I just mentioned, that the company says that it has taken a short position. So what is the short position, and how does this benefit Hindenburg? You know. So basically, now let us understand the scenario by taking some numbers and some very intuitive examples. I'll not go into complexity because this might be a very complex process, but just to understand the concept or the theory behind this. So basically, fundamentals of this concept remains same. It works differently, in different markets. So just to tell you that, okay, so this is a US based firm, so there might be a confusion that how can someone from the US short stock in India. So all these questions, don't worry, I'll try to address that at the later part of the video. So now, how does this in Hindenburg uh, gain profit out of this entire thing? So, as you know that Hindenburg, so let's say there is two guys in Hindenburg, and they feel that, okay, this company is going to this company is not, or the stocks of this company is not what it is supposed to be. So they bet that, okay, in the future the stock will decline, right? So let us take simple numbers. So let's say the future the stock will come down to $1,000, right? So currently the stock is trading at 3,000. They bet this is the current price, and this is what they bet. They bet, or maybe what this is what they assume in future. because they have their investigations, they have their reports, and hence they know that okay, this is something which we know. So we have done a very thorough forensic investigation into the company's fundamentals, into the stocks, and how this is happening. And we believe that the company shouldn't be trading at this much. The company should be trading at this much. So they are very sure that, or maybe there's a high probability in their assertion that the stock prices will come down. Hence, now these two guys wants to make a profit out of this scenario. Right? How will they make profit? Right? So this entire scenario, the way to make profit is what is called as shorting, shorting a stock. So let us understand this. Let us break this down. So what is this shorting? Shorting is nothing but so how does usual stock market work? So this is the usual scenario. So usual stock market work is you buy a stock. Let's say you buy a stock at 5 rupees, right? You buy this, you hold it for some time, and let's say the price increases to 10 rupees, right? So now you sell the stock and you get a profit of 10 minus 5, which is 5 rupees, right? So this is the intuitive way or how we understand stock market. So you give 5 rupees to a stockbroker or stockbroking platform such as maybe Zerodha or Angel One. So there are several stockbroking platforms these days in India. So you buy a stock for 5 rupees, you hold it, you wait for the stock to increase, right? It increases to 10 rupees and then you sell, book a profit. This is the usual scenario. Now there's the scenario called as shorting. Shorting is so basically the fundamentals here is uh, buy low, sell high. Right? This is this is what you have to do to benefit out of a stock price increase, right? So this is when you maybe you assume or predict whatever when you assume that the stock prices will increase, right? But let's say you are assuming that the stock prices will decrease, right? So what in that case? So in that case, you sell first and buy later. Now, how can you sell first, right? So do you need to have a stock first and then buy later? How does this work? So I'll explain you. So sell first means let's say these two guys. So let's say these two guys from Hindenburg. They feel that okay, Adani stock is trading at 3,000 rupees. Uh, in the future it will come to 1,000 rupees. So what they do is they go to their broker, right? They go to their broker, and though they don't have a stock, but they tell the broker that we want to short a stock, right? They say that we want to short a stock. So what this broker will do is shorting means they will have to first sell the stock. But how will they sell the stock? So they will need stock, right? So to sell, they need some stock. So they go to the broker and borrow a stock, right? Borrow. So what do you mean by that? So let's say they when they say that they want to short a stock, the broker will give them some stock by borrowing it or picking it up from some because the broker will have several portfolios, right? Several investors who are already having or holding this Adani stock in their portfolio. So from one of them, let's say they say that we'll just short one stock. So they'll borrow this stock which is worth rupees 3,000, let's say for some fees, right? So let's say they give rupees for simplicity's sake, let's say they give rupees uh, let's say something 100 rupees, okay, 100 rupees. So they borrow a stock by paying a rental fees of 100 rupees. Once they have the stock, so they sell the stock at the current market price, right? Sell at current market price, so which is rupees 3,000. So once they sell, so they'll have 3,000 rupees in their account, right? So they'll have 3,000 rupees in their bank account. Now, now they'll hold the stock for some time, okay? They'll hold the stock for some time. How long? They don't know. Let's say they are short this position. So they will now they release the report. Now there's a market sentiment which goes again. There's a lot of selling, 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 and the prices come down. Now the market price is rupees 1,000. Right. So, but they have borrowed the stock, so they have some obligation to return the stock because borrowing means they are just paying a fees. The stock is not there. So let's say they borrowed it for 1 day, right? So now after 1 day, they will have to return the stock. So let's say they have predicted that okay, this stock will fall from 3,000 to 1,000 in 1 day. So let's say this happens. This happens. So now they will buy back the stock at the market price. So how much will they pay? They'll pay 1,000 rupees and they'll get that stock. All right. Once they get the stock, they'll go to the broker. They'll return the stock to the broker. Right. So this activity is complete, and the broker will return the stock to the portfolio from which he or she took the stock. Right. So in this entire process, you see that the borrower or I mean the Hindenburg guys, they uh, paid rupees 100 as a payment for their stock rents. Then, which is, let's say, I'll put a minus sign. Then they had rupees 3,000 as profit or from buying the stock or selling the stock or the borrowed stock. And then they buy back the stock at rupees 1,000, right? So now how much are they left with? They're left with around 1,900 rupees, right? So on one stock, without owning the stock in the first place, they borrowed a stock, sold the stock, had some profit, held it for some time. When the price went down, they buy back the stock, returned it to the broker, bought back at a lower price, and then their overall portfolio has a profit of rupees around 1,900, right? Including the uh, brokerage fees or the rental fees for the borrowed stock. So now you see what happening here is in a short position when you want to make a profit. So what should happen or what you aim for is you sell high and you buy low. And this is what is called shorting. Right? And this is something which there's some restriction to this, but I'll tell you how does this thing work even without with restriction. So this is what Hindenburg did, right? So Hindenburg with its report, right, created a kind of sentiment, and this report it claims that this is true and we are it claims all the responsibility for everything mentioned in this report, and this created a kind of negative sentiment in the market, brought down the prices of the stock. They had a short position. So what short position means, they already have sold the stock for a higher price by borrowing. Now when the price comes down, they buy back the stock, give it to the broker, and in the process earn profit. So this is what has happened in the entire process. This is what is stock shorting, and this is why Hindenburg, you know, and maybe this is what it gains, right? So this is what Hindenburg gains, right? So it gains a windfall profit. Now there are certain ethical issues, there are certain legal issues to this, whether stock shorting, whether this is good or not, because you are basically betting against the market. So in that case, you are aiming for a market to come down, and whenever market comes down, it is the investors who suffer, right? Investors suffer because they lose their investment. So there are many investors who have or who have had Adani stock in their portfolio. So now they see the value being eroded, right? Then that overall, because if the stock is a part of the Nifty 50 or the Sensex or any index, so that comes down. So basically, this entire stock shorting kind of have a negative effect, negative effect on the company because company loses stock prices. There's a negative sentiments. And just to give you one example of what impact it had on company, not just in terms of market capitalization, it did lose market capitalization of around 2.8 lakh crore as per the current status. It also lost its prices, and also it was coming up with a FPO. So FPO is, I think, follow on public offering. So this is after the IPO. So IPO is the initial public offering. So after the initial public offering, the company, releases more stocks in the market. So that FPO was subscribed just to 1%. So the timing of the report is such that the company was going to release an FPO, uh, on a particular day, and this report came out just a day before that. So this FPO was just subscribed to 1%. So let's say if there were 100 shares in the FPO, only one share was subscribed. So this is what happened. So negative effect on the company. Obviously, investors, they lose money. Overall economy may also be affected because obviously when the investors, which are small investors, they're losing money, so that means their income decreases, disposable income, the tax that the government gets on capital exchange, that reduces because of the losses. The government will now have to adjust for the losses in the income tax that the individual files, and etc. etc. We'll not go into detail of, uh, or maybe I'll have a separate video on what could be the implications. So these are like broad implications of this entire phenomena. So you see, so now I hope you understand this entire phenomena, that what is this Hindenburg. So yeah, one more thing I think, which while discussing with one of my friends, I found out, okay, this is also a thing which is causing confusion to many. So many people say that, okay, Hindenburg is a US based firm, right? How can it influence the Indian market, right? I mean, can it directly buy stocks in Indian market? They can to a certain extent, but did they do that Indian market? So my answer to that question is, okay, the details of it is still not out, but reading from the initial reports, what I found out is they have shorted the US traded bonds of Adani. So US traded bonds mean the bonds which were issued, or the security instruments which are issued in the US market denominated in dollars. So once they speculate that, okay, this has gone down, so they petted or shorted their position against this US traded derivatives, and also some non-Indian traded derivatives. I'm not sure whether they invested or shorted positions in the Indian market, because that's again will involve a lot of legal complications. But yeah, this is what they did. And now the economy is connected, right? Global. So I think it's very easy for a report which was published on Twitter to reach someone in India who is invested in the Indian market, to know that, okay, this is what is happening. So that means that Adani stock in India is not going good. So the sentiments will be directly affected in the Indian market as well. So, though this company might have profited from shorting the position in the US market, obviously the US market where the Adani stocks and bonds are listed, but the entire decline, the phenomena of decline, was seen in the Indian market because of this neoliberal economy, or the way the economy is, linked, global economy is linked altogether. So that's how this works. So yes, the US-based firm can uh, target the Indian market or Indian stocks, because obviously because of the uh, globalization, as we call it. Now I'll just give some caveats or some catch, or maybe some disclaimer to this entire analysis. My intention is not to say whether this report is right or not, because the veracity of the claims could only be confirmed by the authorities. So that's again a legal and a lot of corporate thingy being involved there. Uh, so what we need to understand is the concept, okay, how this shorting works. And yes, the report. I'm not here to justify or uphold the claim, but yes, certain things mentioned in the report makes sense. Makes sense to me personally, because if you see, yes, the Indian stock market has risen, and especially certain stocks had risen many folds in the last 3 years. So What the report says is that out of the $120 billion worth that the company claims, around $100 billion have been created sheerly by stock market in the last 3 years. So this is something which is too good to be true, and obviously things like these does raise concern, and things like these does create alerts in the minds of investors. So if I am a retail investor, I will be definitely be shaken by these kind of claims. uh, shell manipulation, this is something which companies have been doing. This is not a common thing. This is not an uncommon thing. But yeah, this is also something when once you see reports that bring out the real name of the companies and the people involved. So again, you get a kind of skeptical about the company. So these are the reason which why I think most of the retail investors might might be might have fraught with this scenario, and might have been very sentimental in selling their stocks, and just getting out of this entire Adani stock ecosystem to prevent any future damage. Now, whether this is true or not, that is for us, for the investigating agencies to bring out. We cannot, I cannot blindly trust either the report nor the claims by the company. So let us see what happens. But for now, our purpose is to understand how this concept work, how this shorting works, how does this fall in prices work, and I think we have pretty much understood that. Yeah, if in case you have any particular question regarding this entire event, you could just comment it down in the section below. I would try my best to answer that. And okay, so for the time being, uh, have a good day. And yeah, do like and subscribe to my channel. Have a good day. Bye.